BLOCKCHANCE 2021.
Mark will be moderating the chat with co-founder and CEO of software company Microstrategy, Michael Saylor. I will ask Mark to introduce us to Michael, but first, please help me welcome to the stage Mark Böschen.
Well, hello. So, I hope Michael will be joining us shortly. I cannot see him here on the monitor. There he is. Hello, Michael. Good to have you with us here. As far as I understand, you cannot see the room. We've got several hundred people here. It's packed, at least as many as this morning, and then we had singing and dancing. So expectations clearly are high for our fireside chat here. Now, I think most of you will have heard a lot from Michael Saylor for the past 12 months because he's been laying out his vision for Bitcoin quite vocally. But Michael, you've also founded a software company, Microstrategy. Would you just briefly, for a start, tell us what Microstrategy does?
Sure. Microstrategy is a multinational business intelligence software company. So we sell enterprise software to large organizations, government agencies, banks, corporations, everywhere in the world. Whoever's managing the sound, I'm getting feedback in my line, so I'm not sure if there's anything you can do about it, but I've got like a feedback issue. I'll try to work through it, but it's a little bit odd. Anyway, so that's what Microstrategy does. Enterprise software, big agencies, 27 different countries.
Yeah, talking about...
That was better, thank you.
Thanks. Talking about feedback, if it's okay with you, I would just, after 30 minutes, look into the room and open up the discussion for questions from the audience. Is that okay with you, Michael?
Yeah, that's fine.
All right. So, you founded MicroStrategy already in 1998, and in the dot-com boom, you rode that big wave like many other companies. And then, of course, in 2000, it started to become a lot tougher. Then you had the financial crisis that you steered your company through. So these experiences, these events, how did that change the way you think about money and markets and about how you make sure that your company does not run out of capital?
Yeah, well, I've been in business since 1989, and we've been a public company since 1998. So we had a lot of experience operating. I think what I realized is that in an environment where the money supply is expanding, sorry, I just have feedback. Trying to figure this out. So whoever's managing sound on your side, I think they're feeding back into my system. Someone's got an extra microphone open, so it's a little bit tricky for me. I think what I learned in business is that if the money supply is expanding too rapidly, then there's no point in saving money because the money that you're saving in your treasury is debasing faster than the rate of inflation. Or sorry, it's debasing faster than your rate of operating income. So I think by 2020, we'd had about 10 years experience where we'd seen that reason cash is a liability is that if the money supply is expanding at 7% a year and you're getting 1% or 2% yield on your cash, then you're losing 5% of your value every single year. Now in 2020, what happened was the interest rates went to zero and the monetary inflation rate went to 20 to 25%. So the negative real yield on cash and credit instruments became minus 25% for a publicly traded company. And that means that if you're holding $1 billion of cash, you're going to lose $500 million of shareholder value in 36 months. So I think that what was the conventional treasury strategy of a company is to convert all your cash flows into credit and cash. I think that conventional treasury strategy broke in March of 2020. And now you just have to assume that anything you're carrying on your balance sheet is debasing in value at something on the range of, it's at least 15% a year if you're, and it may be as much as 20 to 25% a year, depending on where you are. Certainly in nations like Turkey and Argentina, they've got currency collapses underway. And I think as a multinational, we've lived through that. I lived through a currency collapse in Argentina where our money was forcibly converted from dollars to pesos and devalued by 90% overnight in the bank. And in Argentina right now, where we do business, the peso is 20 pesos to the dollar 36 months ago. The official exchange rate's 100 pesos to the dollar, but the actual rate is 200 pesos to the dollar. So the currency, again, has collapsed by 90% in 36 months. It's collapsing in front of our eyes in Turkey this week. In the Western world, like Western Europe and the United States, the currency is collapsing at about 15 to 20% a year. You could even make an argument 25% based upon the S&P index. So I think the short of it is what I learned after 30 years of struggling is it's really hard to hold shareholder value with any kind of treasury assets. And the monetary inflation rate tripled in March of 2020. And when it tripled, it went from being difficult to being hopeless. And that's what actually shocked me out of my conventional strategy. And we decided that we needed to adopt a property strategy where we converted our cash and credit into a high quality property that would appreciate in value faster than the rate at which the money supply expanded. And that's how we discovered Bitcoin.
Now, since you've been doing this, so since 2020, really, well, you also borrowed to buy more Bitcoin and your share price really exploded following that, right? I mean, it went up 10 times at some point, and now I think it's still up 6 times compared to before you announced your Bitcoin strategy. How did this Bitcoin strategy change things at the company operationally? How is it different now to be there, working there?
The Bitcoin strategy has improved everything. Our brand has exploded by a factor of 100x. Our shareholder morale our shareholders have never been happier. We generated billions, nearly $10 billion in enterprise value in 12 months. And many, many billions of dollars of shareholder returns. We were able to issue a convertible bond that doubled and nearly tripled in value over the course of 6 months. It's the best performing bond in the world last year. So our creditors are happy, our shareholders are happy, our employees are happy. All of our employees are either direct or indirect shareholders in the company, and so the stock had been stuck in a rut for a decade, and it had gone up and down $50 and wasn't going to move. And when COVID hit, when the lockdowns hit, our stock hit $90 a share, and the company was valued at half of revenue plus its cash. And we've just been forsaken by Wall Street. When we announced the Bitcoin strategy, the stock was $120 a share. In order to make it an easier decision for our shareholders, we offered to buy them all out with a Dutch auction. And so we offered to buy out $250 million worth of shares, which was a quarter of the company at a premium. We had some shares tender, but most people stuck with us. And the stock proceeded to go into the 200s, the 300s, the 400s, the 500s, the 600s, the 700s. And of course, now the stock is at a 20-year high, and it's moving north. So it's been good for the employees, good for the shareholders. It's even been good for the customers because now everybody hears about us. You know, if the CEO of SAP or if the CEO of SAP went on CNBC, they would get 5,000 or 10,000 views on Twitter. If the CEO of Microsoft goes on a CNBC, they get 20,000 views. When I go on CNBC, I get 400 or 500,000 views. So clearly, this is it's an idea that's captivating for hundreds of millions of people around the world. Bitcoin transcends a simple treasury strategy. It's an economic imperative for anybody with money on the planet that doesn't want to lose their money. It's a moral imperative if you don't have a bank for billions of people in the developing world. And it's a technology imperative because it's pretty clear that 8 billion people are going to move money at the speed of light on their mobile phones in the next 10 years, and this is the way they're going to do it. So I feel like we really touched a nerve. We've used the phrase Bitcoin is hope, and actually if you go to my website, hope.com, you'll see everything about Bitcoin. And I think Bitcoin took us from a hopeless situation to a hopeful situation. One last point. The road to serfdom is working exponentially harder for a currency growing exponentially weaker. So if you're working in Argentina, Venezuela, or Turkey right now, and the currency is collapsing, it's not going to help you to get a 10% raise every year when the currency is collapsing 40% a year. If you're working in Europe or the United States, and you've noticed the prices are going up 15% a year, or 10% a year, or 20% a year, I think the Case-Shiller index in the US is up like 27%. If you're a dentist or a doctor or a laborer and your wages are going up 2% a year or 3% a year, and the cost of assets like stocks and properties and luxury assets or aspirational assets is going up faster, then you can work your entire life going backwards and you'll never make it. It's impossible. What I realized at Microstrategy was 2,000 people doing 100,000 things right every day and doing it for an entire year could make about $75 million in cash flow, and we were losing $100 to $150 million in shareholder value on our balance sheet by doing nothing with the assets. And it became clear that life was hopeless, and there's no point in going to work and doing anything if you don't have the right investment strategy. So I think when we switched from holding cash and short-dated treasuries to holding Bitcoin, all of a sudden our time horizon went from being a short time horizon to being a long time horizon, because now we had an endowment. Like today, as we sit here, instead of having $500 million or a few $100 million of crumbling cash and credit, which is going to zero, we now have $7 billion to $8 billion worth of assets that are appreciating in value 100 to 200% a year. So it's like being a well-endowed university or a well-endowed family or a well-endowed company. We can now take a breath and focus on the long term. And we know that we're going to have the financial means to do whatever we want to do in the business and to treat our customers, our employees, and our shareholders well.
Well, Michael, you just explained why you think it's great for the company, for the employees, and for CNBC, by the way. So that what you did to buy Bitcoin with the company. Now, I might be an investor who wants to buy a company, let's say, and I'm interested in that company. Maybe I also have a lot of Bitcoin that I invested in. So isn't it a bit of an issue that if I now want to buy that company, I also buy a lot of Bitcoin on top of that, even though I might not want to buy much more Bitcoin? So isn't that a bit of a problem that you have this mix-up of a company with Bitcoin right now? Why should an investor have to buy the package without being able to buy either Bitcoin directly, without buying a company, or just saying, I love this company, I want to buy a certain company?
Yeah, well, I mean, there are thousands and thousands of publicly traded companies, and so investors can choose which companies they want to invest in. Our approach with shareholder relations was we telegraphed that we were considering doing this, and then when we did it, we paired it with a Dutch auction so that any investor that didn't want to be invested in a company with a Bitcoin strategy could sell their shares at a profit. And so by the time we finished that Dutch auction, we had rotated our shareholder base to shareholders that were long Bitcoin, that wanted the exposure. There are trillions and trillions of dollars locked up in public investment vehicles where they need to invest in securities and they can't invest in property. So we actually provide a pretty important use, a utility for all those companies. It would take them 1 to 3 to 10 years before they could ever buy the Bitcoin, but they can buy MicroStrategy stock and get Bitcoin exposure in a matter of minutes with security. So MicroStrategy is actually a vehicle for companies that want to own, and investors that want to own Bitcoin. As for it being an option, look, if you were running a company in Zimbabwe or in Venezuela right now, well, and you're an investor in one of those companies, and the CEO said, we've decided to keep all of our profits in the Bolivar, and you said, well, the Bolivar is losing 98% of its value this year, you wouldn't want to be invested in that company anyway. Like, destroying your company or committing economic suicide is not a good strategy for keeping your shareholders happy. And so right now, any company that's a value stock, that's a low growth, high cash flow generating equity, is in essence a currency derivative, because you're like a bond. You're valued based upon fixed cash flows. So if your growth rate is slower than the rate of economic expansion, you can't hold shareholder value. The stock price is going to deteriorate as the inflation rate increases. And so for any investor that understands this, they would want the company to convert its cash flows from a depreciating currency into an appreciating property. So we think we're just acting rationally, and of course, our shareholders think the same way, and everybody doesn't have to choose to invest. We're a public company, right? You can choose what kind of companies you want to be invested in. It just turns out that every single year there's an increasing number of investors that realize they want to hold a non-sovereign store of value. And again, if I give you the example of Turkey or Argentina, it becomes pretty obvious why you don't want to be invested in value stocks that are generating Turkish lira or generating pesos right now, because the currency's collapsing, the balance sheet's collapsing, your stock is going to collapse. Many people in Europe and the US, they think that their currency is stable, but if you look at the S&P index this year, the S&P index is up 25% or more. The S&P index is generally up 10% in the last 100 years. It's obvious that there's an extra 15% inflation in the money supply on top of the traditional inflation rate. And the traditional inflation rate was about 7%. So if I add 7% to 15%, you've got a 22% collapse in the purchasing power of the currency. And that means that every value stock that isn't growing its cash flows at 22% or more is actually diluting your shareholder value.
Well, so there's also a lot of innovation, right, in those companies.
It's a public company. That's why we make public announcements and we're transparent about it. But if you happen to be an investor and you want that kind of exposure and you understand the benefit of a non-sovereign store of value and the reason that Bitcoin is appreciating 10 times faster than equities, then of course it's the best thing that the management team could have done for you.
People can choose between companies, like you said. They can also choose which crypto assets they buy. Now, Ethereum already has half the market cap of Bitcoin. The latest Bitcoin network update introduced smart contracts to the network, while Ethereum has been there for some time now, with 1,500 software projects on the network at least, and Bitcoin probably a lot less. So isn't that really something that's going strong for Ethereum, a big advantage, all this developer activity? And Ethereum, it's already been around for a couple of years too, so until now it's stable. Isn't that, how do you see the competition between different crypto assets, for example, Bitcoin and Ethereum?
I think that the entire crypto universe could be divided into two classifications. You have Bitcoin, which is a universally acknowledged common property. It's an institutional grade asset. It's not controlled by any entity, and it's not regulated by the SEC as a security. And because it's common property, it makes it digital property, and you can build a $100 trillion or multi-$100 trillion economy on top of that one token. That is an innovation, and that's universally acknowledged as property. And if you're a public official, it would be unethical to promote a security and maybe illegal to promote a security. So a public investor, a public official, and a public company can't safely, legally, and ethically engage with anything other than a property if you're pursuing a true digital economy strategy. So Bitcoin is the safe haven, and there are thousands of things you can do with it. But the obvious use case is store of value in a digital asset. The rest of the crypto economy, all of those tokens are very uncertain, very competitive, very insecure. And I think that if you look at the testimony and all of the publications coming out of the regulators in the US, out of the White House administration, from Treasury, from the SEC, from the CFTC, if you look at the testimony of the chair of the SEC in front of Congress and public speeches, even as late as just yesterday, when Gensler was talking to Jay Clayton, what they've made clear is there might be a handful of other properties or commodity tokens in the crypto world, but just about everything else is a security. So that means the stable coins are securities, and they're going to be regulated, and they need to be issued by FDIC insured banks. It means that most tokens are security tokens, which means they're being issued without proper disclosures. And that would make it unethical for a public figure to support them or promote them, and maybe illegal. And I think most decentralized finance is all not compliant with either Treasury guidelines, anti-money laundering guidelines, CFT guidelines, or securities exchange guidelines. Ethereum is used primarily as a decentralized finance, exchange, and also it's a token, which is probably a security. So I don't really, if you're a venture capitalist or a speculator and you're not concerned about those things, and if you can move rapidly, then perhaps you can invest in this. But I think it's pretty obvious that they're nearly all securities. And if they're all securities, none of them are compliant with the public policy framework of the Western world, which means in most of the crypto industry, there's going to be a lot of uncertainty. There's going to be regulatory crackdowns. There's going to be a massive shakeout. And if you're a speculator, maybe you can figure that out. But I think it's a massive distraction. Gary Gensler was asked point blank in congressional testimony, and he's the chair of the SEC. He was asked point blank by a congressman, is Ethereum a property? He refused to answer. He immediately said, if a token is issued pursuant to an ICO, it's probably a security. Ethereum was issued pursuant to an ICO. So I think it's pretty clear what they're trying to tell you. So Bitcoin is property. Everything else is a venture capital speculation. It's pretty obvious that Shibcoin and Dogecoin, Elon Musk coin, and Saylor Moon coin are speculative entities. And so if you're a speculator, or a gambler, or a venture capitalist, and you want to delve in that area, you probably can. But the only real safe haven for institutional investors is Bitcoin.
Now, there were a lot of news here for people in this room at this conference who might like Ethereum or decentralized finance. You basically say what you hear from Gary Gensler and other regulators in the US, that it's maybe becoming a lot tougher. If you issue a security, you have to have a security prospectus, a lot of lawyers involved. And I mean, what do you think this means for decentralized finance? We had this DeFi summer with this big boom of development of decentralized exchanges. Do you really think all of this will have to be closed down, or is there a way to make this compliant with what you've just been describing, this regulatory push?
The chair of the SEC has said on no less than 5 occasions in congressional testimony and public speech that decentralized finance, for the most part, is decentralized in name only. And he uses quotes. It's not decentralized. Yesterday, to Jay Clayton, the existing chair of the SEC said to the former chair of the SEC yesterday, he said, there are components of every decentralized finance exchange that are actually centralized, and they're doing the same thing as centralized exchanges, and they need to be regulated the same way. The Caroline Crenshaw memo was issued about a week and a half ago. It's online. You can actually read it. I tweeted it. If you go to my Twitter, Saylor, S-A-Y-L-O-R, you'll see it. Caroline Crenshaw is a commissioner of the SEC in the US. She wrote a fairly detailed piece and published it the summary of the piece is nothing in the DeFi area is compliant with existing law. All the DeFi exchange projects need to come talk to the SEC. FinHub is waiting for them to call. FinHub, which is managing this, it has never denied a meeting. And they're expressing a bit of surprise that the DeFi projects have not yet consulted with them. And they're noting that there are probably all sorts of ethical and moral and regulatory quandaries that are brought up by the existence of DeFi in its present form. So I think it's pretty clear, and I think that regulators are trying to say it's pretty clear, DeFi can't go on in its current form as well as certain trading restrictions on securities tokens, probably as well as other restrictions. Anything that's a staking token that's generating yield is a security. And that means it falls under the guidance of the regulator. So I think that if I was in the DeFi space, it's 100% certain that there's regulation coming. It's reasonably certain that it will not continue in its present form. And there are going to be a lot of rails and a lot of constraints put on it. So, you know, use that information as you like. I wouldn't invest in it. But again, if you're a speculator or a venture capitalist, a lot of people are making a lot of money right now in the market doing it.
Right. That's very
the
bad news
regulators are
for the
sending
guys.
a message that's quite clear, which is they think it's non-compliant and it needs to end.
All those guys who are making 300% on their pancake swap now might think, okay, it's just Michael Saylor, he loves Bitcoin, but you know, this week the new crypto team at Bank of America published a note saying stable coins are the Wild West and now the sheriff is coming. So that chimes in with what you've been saying about stable coins too. So what's the view on stable coins? How's that going to develop with the sheriff coming in and maybe saying to Tether, it's not enough to just publish something with stuff that you supposedly own without even naming your banks that you do business with. So what's going to happen there and how is it going to change stable coins?
Well, I mean, first, why does the world want stable coins, right? We need them to run a 24/7, 365 crypto economy with high speed, low friction. But the world also wants stable coins in places like Lebanon and Turkey and Argentina and Afghanistan, Africa, where the banks are either seizing the dollars or the banks don't offer dollars, or you don't trust the banks to not freeze your assets. So stable coins are pretty useful. I think they're critical to the future of the economy. And I think the regulatory view, and this is expressed in the President's Working Group report. There was a report on stablecoins that came out about a month ago, and it was jointly authored by the SEC, the CFTC, Treasury, with the cooperation of the Justice Department, the IRS, and other parts of the White House. It was pretty cross-departmental. What they said was, stable coins have a use in the economy, but the present situation is such that the organizations issuing them are not transparent and they're not sure they're backed one-to-one and they don't comply with current AML, KYC, anti-terrorism, anti-money laundering acts. So if it's going to continue, it needs to come into that public policy framework. What they did was say, they pretty much said Congress and Senate should pass a law that mandate that banks that are FDIC insured issue stable coins. And if you're going to issue a stable coin, you need to comply with AML, KYC rules, and then you need to be an FDIC insured institution. And then they said, until Congress passes that law, they're going to regulate stable coins at that same standard. So, conclusion. That the industry is moving from an entrepreneurial state to an institutional state. The first decade were entrepreneurs. They were moving very fast and they didn't have the licenses. They're not public companies. They're not public banks. They're not FDIC insured institutions. They're not in the public policy framework. They're not regulated. And in that world, Tether, Circle, and others, they reached about 30 billion in stable coins a year ago, and then demand exploded, and now they're 130 billion. But having said it all, you know, they're not in the public policy framework. I think the regulators realize that stable coins are either going to 10 trillion or they're going to zero. And if stable coins or the stable US dollar is going to go to 10 trillion, we need to actually rotate from entrepreneurs to institutions. So this is a crossing of the chasm and a maturing of the asset class. All of the companies that are currently issuing stable coins will either need to become banks or publicly traded companies or regulated exchanges, or they're going to get squeezed out of the market. And I think the regulators were kind of saying two things. They were saying if you're in the business, you need to become regulated and transparent, and you need to back your stable coins one for one. You can't like put 50% of the assets into unknown credit instruments that we don't understand, and you can't be private offshore. They were saying that. The second thing they're saying is they're giving a green light to JP Morgan and Citigroup and Bank of America to issue $1 trillion worth of stable coins each. And so I think if you look at the industry, right, what you have is $500 trillion of money in the hands of public companies, public banks, chartered banks, and public investors. And they're staring at the crypto economy and they're afraid to come in because they're not sure whether stable coins are kosher to issue, if it's okay to issue them, and whether crypto is property or it's a security. That's why they didn't want to come in. You've got the entrepreneurs that are under no such compunction. They're going fast and breaking things because they're making billions or tens of billions or hundreds of billions of dollars. There's a lot of money there. They've been moving rapidly. Now you've got the regulators led by the SEC and Chair Gensler. And Gensler is probably the most informed regulator on crypto in the world. He studied it and he taught it for 3 years at MIT. He knows it. He knows crypto probably better than any of the crypto entrepreneurs. And he also knows the law, and he also knows trade finance and banking finance. And he understands commodities and securities probably better than anybody in the industry. So what he's saying is it's time for the industry to grow up, and Bitcoin is good. Digital property is good if it was issued fairly, right? Satoshi's innovation was to create a token with no pre-mine that traded for a year without any market price, where there is no central control, that is fair and equitable and decentralized. That's the innovation. She says if you've got digital property that's common property and it's fair, then that's an innovation. And stable coins that are issued by banks that can move currency at the speed of light for free, 24/7, 365, that's useful. And if those two things come into the public policy framework, then we can grow the industry from a $2 trillion industry to a $200 trillion industry. But if those things stay outside of the public policy framework, if you try to move security tokens around with 100x leverage with no KYC offshore, then you're tripping over treasury restrictions, commodities restrictions, securities restrictions. That's not going to last. They're going to shut it down. And what they said yesterday and what they've been saying in testimony, but I hear it getting more intense. What they said is if these security tokens and these DeFi exchanges don't come into the SEC and come into compliance, they're going to launch enforcement actions. And they're going to begin to use enforcement as a tool more generally. There are already a lot of enforcement cases, but there'll be more.
Yeah, Michael, let's give the audience a chance to jump in here. I think in general, it's a good thing for the world. If your goal is you want to see the industry grow by a factor of 100, but it's going to put more regulatory constraints on people in the industry if they want to actually issue these tokens and move them around. Yeah, I mean, you describe a lot of changes coming to the whole crypto environment. So from now on, if anybody would like to ask a question, please go ahead, raise your arm, and somebody is going to come to you with a microphone. We have a gentleman here in the front who likes to ask a question to Michael Saylor. Here, over here. Okay, coming up, the microphone. Could you please state your name and your question?
Yes, hi. My name is Mahdi Fadian. I'm a fan of yours, and my question is, you are a genius in corporate finance, among other areas, and you have been advising mainly on mainstream the other publicly listed companies to also follow your strategy. Now, what do you would advise on another level to other companies like you or like yourself in regard to the step that Mr. Zuckerberg did in rebranding his company to enter the metaverse potential, and how would you, either for yourself or for other companies that are not in your same bracket, how would you do such a great marketing rebranding step to combine Bitcoin and the publicly listed companies and grabbing the monopoly there? Thanks.
I think every company's got a balance sheet strategy and they've got an operating strategy. So your operating strategy is whatever you generate revenue with and generate cash flows and profits with. And your balance sheet strategy is how much capital you hold on your balance sheet and how you invest it. I think that the easiest thing any company can do is simply adopt a Bitcoin standard where instead of holding capital on their balance sheet in euros or dollars or in sovereign debt, which means they're holding credit, they're holding credit or cash or currency derivatives. They should just switch to a Bitcoin standard where they start holding Bitcoin as the primary treasury reserve asset. Because if you're holding sovereign debt or cash on your balance sheet in the current environment, you have a negative real yield of minus 25%. If you have $100 billion of cash and credit, you're losing $25 billion a year in shareholder value, right? If you took the same $100 billion and you invested in the S&P index, you would have had $125 billion within 12 months. So you see, what you're doing is you're diluting shareholder value by holding any cash, any euros. If you're lucky, you're holding euros and dollars on your balance sheet. If you're unlucky, you're holding Argentine pesos, Venezuelan bolivars, Turkish lira. And if you happen to hold any of those weaker currencies on your balance sheet, you've got a negative real yield of 50% or minus 60%. So the obvious thing to do for any company is simply flip from a fiat standard to a Bitcoin standard for treasury. It's easy to do. 3 people in your finance department can do it. If Apple were to do it, they would generate something like $200 billion in shareholder value in the following 12 to 24 weeks. They would probably drive up their stock by $300-400 billion, and over time they'd probably generate $1 trillion. So 3 people at Apple Computer could generate a $50 billion or $100 billion a year benefit to their shareholders. It's very easy. You would obviously rebrand the company because everybody would know that you're on a Bitcoin standard and there's 250 million people that are interested in this. So that's the simple, low risk, easy thing to do. The harder thing to do is to tie some of your operations to Bitcoin. If you're a finance company like Fidelity or PIMCO and you sell fixed income funds, if you have most bonds in Europe have a negative real yield. So if you're selling fixed income funds with a 1% yield or a 0% yield, if you simply put 5 or 10% of that money into Bitcoin, Bitcoin had a 200% yield. So you could put 5% of a bond fund or you could allocate 5% of your bond fund to Bitcoin and juice the yield, and you would end up converting a 0% yield fixed income fund to a 10% yield fixed income fund while only risking 5% of the overall assets. And so low volatility, high upside. So finance companies can start issuing instruments backed by Bitcoin. If you're a tech company like Apple, you can build Bitcoin into the iPhone. If you're Google, you can build it into Android's operating system. If you have hardware, you can build it into your hardware. So these are a little bit harder. If you want to build products and services around digital property, you can do it. If you're a bank, you should probably start to offer digital property, custody and sale, and then banking. There's $1 trillion worth of digital asset in the form of Bitcoin, which is not banked very well. So if you're a bank and you start to take Bitcoin as collateral, you'll have trillion or trillions of dollars coming to your bank where people want to finance it. So I think that there are lots of product and service opportunities where you can tie your P&L to the crypto economy. But that requires obviously 100x or 1,000x more effort than tying your balance sheet. There's some companies that can't tie their P&L to Bitcoin. For example, if you're a restaurant or a cruise line, or you're an ice cream shop, or you're a dentist or a doctor, I'm not suggesting you get into to digital property. What I would say is you ought to focus on that business and generate as much cash flow as you can. You should just convert the cash flow into digital property as fast as you can, because if you're holding it in fiat currency or some other form of property, it's debasing at a much more rapid rate. So I think that would be the summary there.
Yeah, great. We have another question here. So also Saylor Boomcoin is the new name of your company, right? I think that was the scoop we got here today. That's what you mentioned earlier, right? So, but now the next question.
I have a mic here. I'm going to have to speak into my mic. You have to speak into my mic.
Okay. Yeah, first of all, big respect for your decision. My name is Vít. I'm running a small country in Balkans. We went full in Bitcoin 6 years ago. It's called Liberland. My question is, I was actually in Salvador during the announcement of Bitcoin City, and the side announcement was Bitcoin Bond. I think it's pretty revolutionary. It will create similar effect, like you're going in fully in Bitcoin now for the countries. They expect it will create a FOMO among the nation states. What's your take on the Bitcoin bond that was announced by Salvador?
I think it's too soon to have any comment on it because I don't know the details of it. And I think I'd have to wait until after the bond was issued. And then if I read the details of the bond, I'd have an opinion. My view generally with regard to Bitcoin is whatever you do, you should focus upon doing that better and not get distracted. And I think that with regard to Bitcoin financing, it makes sense to borrow money against Bitcoin. So, for example, if you're a city and you could issue debt, issue €1 billion of debt, I think the interest rate for municipal debt in Europe must be 0. I think the 30-year swap rate right now in the euro is 25 basis points. So if you could issue 30-year debt at 50 basis points or 75 basis points and then buy Bitcoin, the way I would do it is I would issue €1 billion of debt, I would buy €1 billion of Bitcoin, and Bitcoin is appreciating 170% a year for the past decade. So we could debate whether or not Bitcoin will appreciate 10% or 20% or 100% or 170%. But what's clear is it's going to go up, it's not going to go down. And if it appreciates 100% a year, then your city would generate 100% real yield tax-free on $1 billion. So if you wanted to generate $1 billion of value for your citizens, you issue $1 billion in debt, you buy $1 billion in Bitcoin, you hold it in 12 months, you'll have $2 billion in Bitcoin, then you'll have $4 billion in Bitcoin, right? If it keeps doubling, you'll have $10 billion in Bitcoin. If you really wanted to pursue the Bitcoin strategy, the right way to do it is issue $1 billion of debt at low interest, buy the Bitcoin, and then when you double or triple the amount of assets in Bitcoin, issue another $1 billion of debt. If you're a municipality, generally sovereign debt can be issued without much collateral. The beauty of a city or a country is they can issue almost infinite debt with very little collateral. But at the point that you need collateral, you would actually post the Bitcoin as collateral. So once I get to 4 or 5 billion in Bitcoin, maybe I borrow $1 billion more, posting the Bitcoin as collateral, lever it up, and then buy more Bitcoin. Now, Microstrategy did that. What we did is we used 250 million in collateral, bought Bitcoin. Then we did a Dutch auction, took another 175 million, bought Bitcoin. The Bitcoin doubled. Our stock tripled. We issued more debt in the form of a convertible note at 75 basis points. We did 650 million of it. We bought Bitcoin. The Bitcoin doubled. Our stock doubled again. We issued $1 billion of debt at 0% interest. The Bitcoin went down. We went and we issued junk bonds at 6% interest, bought Bitcoin. Bitcoin went back up again. And as we're here today, in about 12 months, 12 months, we've got maybe 14 months, we basically bought $3.5 billion of Bitcoin that, of course, has more than doubled. So now we have $7 to $8 billion in assets. Most of it's unpledged. So in theory, we could issue more debt where we pledge the asset to issue the debt. And as long as we're thoughtful about how we do it, we can leverage up forever. Now, the most important point to make here is Bitcoin is capped at 21 million, which makes it a scarcity in the universe. Everything else that you could finance is a commodity. If you do mortgage-backed securities, or you borrow against equity, or you borrow against buildings, or you borrow against oil, the problem with borrowing against all those other things is the world's going to produce more of that stuff if the price goes up. Whereas when you're borrowing against Bitcoin, the world can't produce more of it, no matter what the price goes up to. So if you thought that, financing real estate was a good idea, Bitcoin's a lot better than real estate because Bitcoin is scarcer and more universally desirable than real estate. So that's the way I would pursue it. I don't think that any sovereign nation has done that. No municipality has issued debt to buy Bitcoin, and no country has. And I think that many people in the crypto world, they kind of fall into this trap of trying to get something for nothing. Like, they'd rather someone mint an altcoin like a Shiba coin or a yo-yo coin and give it to them for free. But the problem with something for nothing is they're securities, they're not property, and there's an ethical quandary you're going to get into eventually. If it's too good to be true, like you're a mayor and you'd like to have $1 billion but not actually take $1 billion of risk, it's an ethical quandary. The right way to do it is borrow $1 billion or invest $1 billion of real money, take the risk on Bitcoin, and then wait for it to appreciate. And if you do that, that's technically sound, financially sound, ethically sound. The negative is there'll be some volatility, but there's volatility in the real world. If you're going to do things with courage and conviction in life, you have to be prepared for the volatility. Bitcoin's gone up 170% a year on average every year for a decade, not without volatility. If I eliminate the volatility, I have gold, and gold has gone up 0% a year. Or I have fiat currency, the euro and the dollar, and they're losing power. So you see, I can't have my cake and eat it too. You either have to accept the volatility and accept the risk, and then you'll get a tangible benefit that will last forever.
Thanks, Michael. Michael, we've reached the end of our time. Thanks for sharing your bullish vision for Bitcoin, and also thanks for your warnings regarding stablecoins, unregulated exchanges, and some parts of DeFi. So, great to talk to you.
Thank you very much, gentlemen. Let's give a round of applause to Mark Böschen and Michael Saylor. Thank you, Michael.
Thank you.
Thank you, Mark.
BLOCKCHANCE 2021.